Welcome to TradeTheMBI.com. This is John. This report is for the 24th. Well, and this is just before the election results in France. Now, obviously, we had the nice move up, a little bit of a retrace into it. Not a big deal. We're at a critical point here where the both orange, potentially even green, will meet the cyan, and that would be the impetus towards maintaining this upside move. We would definitely expect continuation of the shakeout in the right direction. That would sustain the move. Now, we didn't get overbought anyway if we look down here at the extreme histogram. So, all things being equal, we should see a continuation. Now, that assumes there's no significant surprise from, well, and here it is, the euro. Now, based on what we're seeing here, the euro is priced in, well, anything but Le Pen victory. Now, given that we just had that somewhat significant terrorist attack on the Champs-Élysées, it's unknown whether that will have a significant impact at this particular point. For the most part, it's been showing the potential of a little bit of a retrace coming back in here. We just had short-term buyers fading it dramatically, and we're about to see potential of a steel crossover, cyan crossover of the red, which would indicate shorts are activating into it. And we have the positive extremes going all the way back to this bump up that would take it down. Now, if Le Pen gets over 30%, I think that presents huge downside risks to the euro, significantly so. So the results for Sunday will have a dramatic impact potentially. If it's as expected, I don't think you'll see as dramatic an upside move. The belief is that the stable candidates will win. We've kind of indicated this has been a growing aspect. So no uncertainty has been priced in for a surprise in the Le Pen situation. I think that would definitely have market impact too, because any significant drop in the euro is certainly going to weigh on the S&P. So that's something to bear in mind. The short side potential is certainly a much higher risk at this particular point. This elevated move in bonds, obviously we can see the whole thing's got to be retraced at some point here. We're right at the threshold here of the ABM. And likewise, that pressure could actually lift bonds even better. If it's something negative, there'll be a flight to safety. You can see we've been riding well here with the cyan under red, which is still bullish. Interestingly enough. So it's been quite a significant move since the buy we had way back here, and has been following above the ABM. So a lot internationally rides on this election. If the expected move takes place, then no big deal. It's not going to have the same impact on oil. We had the short system setup that developed here with the orange moving above the plus 13.5, and that resulted in a significant drawdown. But we've been talking about this nonstop, that even in this move, it was kind of crazy given the fact that it was pretty easy to see that gasoline supplies were going to be way ahead of market's expectations. And it's also a bit of a scary indication that you're not seeing significant enough upturn in economic growth to drive a reduction in inventories. And so this is why we talk about these things, because you combine this with the rise in bonds versus the decline in oil, you're not seeing yet significant economic turnaround that would justify that inverse relationship. And that's why we look at these things, because it's sort of a telltale that there's still some economic uncertainty. Now, is that necessarily bad for the ESnet? It may cause the Fed, in their over-exuberance to raise rates, to pause a bit. We'll have to see how that impacts them. It seems as though the rate increase has been timed to prevent a significant economic move, which is sort of counter to the new president policy, who wants to see more growth in that. He doesn't have control over the Fed, and they can certainly put the damper on things. And we've had low to no growth policies for quite some time. They clearly have not wanted to change, even though the market is anticipating there should be a change. Now, that's going to depend too. In this coming week, there's talk that tax relief and potentially even healthcare could come out. The problem is that's still talk, and so kind of puts people in an awkward position. And obviously, gold, though, I think is going to continue outside of that because it's going to be used as an alternative safety play regardless of what those outcomes are. I'm still bullish gold overall in general. Let's shrink this 5K chart because it's pretty clear what started to develop here. We ended up with the early short signals that took place from the previous day as the orange moved well above there. We ended up with some soft signals that came through, but the problem was there was no continuation shakeout movement. And you can see that once it started going negative, it stayed that way. We ended up with another little buy intraday that started to come up, was unable to hold itself. And that was key right here when the green midterm buyers met with the shorts right there and complete rejection that led to new lows. And we've not seen a reset at this particular point. What I looked at is when you have this rising low setup and you start to get a squeeze, it's not the same as a Bollinger Band effect, but when that narrow range develops, there's usually a drawback to it. And in this particular case, it just created a new higher level for the lows. And the inability to get past that 50%, even on the readjustment, is always a critical level. And so I like these when you get them because anytime you move back above the next higher range, it's pretty easy to see where things are going to go from there. And then it just caved back in, and then we didn't get any new retrace, even though we ended up with the number 5, which is a positive signal. You can see we've pretty much held flat to where that buy signal came in with the orange dip down below and nothing. So there's still, at least from an ES standpoint, there was a degree of uncertainty, particularly going into this, because there isn't going to be any trade until futures open in Hong Kong, and it'll still be a little while before French results start to come in. And I think the early ones, 7 p.m. local time in Paris, the first polls start to close 8 p.m. officially. So definitely want to be keeping an eye out for that, and that's going to pretty much reflect how things go. And as long as Le Pen stays below, say, the 25% threshold, I think you'll see it. But if it gets anywhere near the 30% number, you're going to see a significant volatility increase, both in our markets, both in the euro, everything. So there's a lot of excitement built into this weekend, and it'll be interesting to see how it plays out. At this particular point, the euro has been riding high, but like we showed, it's right on the edge there. So not everybody's 100% convinced, but it's been a slow evolution where they feel that the status quo may be maintained. And so if that remains the case, everything's going to be okay. If not, we're going to be in for a wild week. So let's look forward to that. I wanted to get this one out before it happens so that we have some clear ideas of what to look for. From a market standpoint, we're still intraday looking at this sort of softness, but from the daily standpoint, we didn't get the dip down below to reinitiate a buy. So while we've been holding in this prolonged short, doesn't look well to maintain it. So I think you're going to have to see a continuation of that daily shakeout improving, and it's still been in negative territory. So it won't take much to have that continue to the downside. So I think there's some significant risks associated with the early trade, and this is one of those where I don't think we have a clear indication other than the market is still looking at relative softness at this particular point. So be cautious as we start into this, and we'll see how it all plays out here very shortly. It's one of those few times where we're not seeing the market make a clear distinction at this particular point. At this particular level, though, you've got to be concerned about this reading. You have a divergence of a little bit of a rising shakeout, but not the confirmed buy signal that you would look at with that orange dipping all the way below. So that's the long and short of it at this particular point. A little bit of uncertainty going into this, next to final week of the month. So that's exciting stuff. As always, though, to look for me on the Skype chat. I'll keep posting the charts as any news comes available. Trade well.